Welcome back to the Make Account Podcast.
I'm Marcus Mire, founder of Mire Group CPAs and the Total Control Accounting System.
And I'm Tyler Warner, small business owner with a lot of accounting questions. In this episode, we're talking accounting to the moon. This is something you've been probably wanting to talk about for a while.
Long time, yeah. Yep.
Yeah, so if you didn't catch that reference, we're talking about cryptocurrency and accounting. And
Right.
it's just the talk beforehand. I mean, it sounds like absolute chaos.
I wish we could have recorded the prologue there.
Yeah.
Yeah, and so when we say accounting, for crypto, really just to be more specific, talking about taxation of it, how to think of it in terms of what constitutes a taxable transaction, how is it taxed?
Yeah.
There's like lots of questions. So one of the things I've got pulled up, and I think hopefully what you and I are going to do here is kind of bounce off each other because I know you have a lot of questions.
Right.
Is I've got the Irs Faqs, which are really actually pretty good. Okay, so we've never done this before. Can we put this do we have show notes?
Yeah, we have show notes.
Let's put this link in the show notes.
Absolutely.
Okay, so our first show note.
Yeah.
Yeah. Let's put this in the show notes because I think this is a really great tool. Like, handles all the high level basic questions and even gets into some that are really more detailed.
Yeah. All
All
right.
right. So I'm going to go off their questions. So let's talk about the first question. I think get the discussion
Here,
going.
let me just throw a complete wrench in this
gosh.
real quick because I'll just be that naive. I'll be vulnerable here.
Okay.
My first thought was like, if it's not in dollars, then the IRS doesn't care. Now, I know enough to know that's not true anymore
Right.
because I've seen, I feel like that used to be.
Because you heard us talking before.
Yeah, exactly.
That's really
because,
why.
now I'm scared.
Right.
No, not really. I just felt like, okay, now this is a big, you've got major players here. The IRS has been talking about it.
Yep.
So I know enough to know that's not true, but that was like that was like the hypothesis I had was right. Like, this is all in the digital world.
Yeah.
The IRS doesn't care until I like bring it back into dollars.
Okay, so almost kind of like the concept of when you own a foreign company, you're not taxed until you repatriate the money or bring the money from offshore.
Exactly.
Yeah.
Like, I just was like, this is in
Yeah.
the internet.
Yeah,
You
it's
know
in
what
the
I mean?
cloud.
Like, well, what do they care if I have tokens or
Right.
coin? Like,
Oh, but they
it's
do.
all just ones and zeros.
Basically. No, yeah, I would say to that, it's property. All right, so that's the
Okay.
first thing I think we need to establish. Like, it's property.
Okay.
So think of it like this. If you bought a lot, sold the lot, what'd you pay for the lot? Is your basis in it? What you sold it for is your sales price. The difference between it is a taxable gain. That's a very kind of first fundamental thought I would have, is that it's property. And it's like a stock or a bond, but has some other qualities that are different.
Gotcha.
So property.
And has it always been, or is this
Always. Yeah, it's always been that way. And so I guess at least it has been since there's been guidance on it. I don't think when the guy traded the big, the infamous traded for a pizza, that they even knew what to do with it then.
Right.
But since it's kind of been in vogue, like, and people know about crypto, like, this has been the concept. It's like it's property. So, okay, you've got this concept of it's property, which then means it's capital gain property. So let's talk about that. Like, capital gains are a type of income that is what you call, they have a preferential treatment in the tax code, meaning if you sell things and get a capital gain, it's long term, meaning you've held the property over a year, and it's long term. Then that gets a cheaper rate than like ordinary or regular income, like your wage from your job. So those are the big picture concepts. Also, crypto it's usable, right? I mean, you can pay for things with it, right? You can trade it for services. You can trade it for products. And so at that point, that's a taxable transaction too. So just be thinking like a buy and a sell. Obviously, that's taxable, and that goes down that capital gains route. But also, if I use it, that's like a sale. So whatever if I buy something and I trade $50 worth of Bitcoin, I have a $50 sale of Bitcoin.
Gotcha.
Make sense?
Okay.
So
So even if you were like to get a crypto like debit card
okay.
and you shop with it,
Well,
those
I don't
are
think
all-
you spend. I don't think generally you on those debit cards. I think those are more like rewards,
Okay.
kind of things, like where like BlockFi and these different.
Yeah.
They'll give you rewards, kind of like air miles.
Okay.
But they'll give it to you in crypto. But that would be taxable. So I'm glad you brought that up.
Yeah.
The rewards they give you are taxable. So,
Okay.
but think of it. Yeah, I don't think generally most people right now are not using it as a currency.
Gotcha. So we've
'cause it's so
established
valuable.
if you've got a coin, it's property, and the government wants to know about it.
Correct. Yep. Yeah. I mean, this is great. This is the question. The second question of the IRS FAQs. Question: how is virtual currency treated for federal income tax purposes? Answer: virtual currency is treated as property, and general tax principles applicable to property transactions apply to transactions using virtual currency. Basically, just summarizes what I just said. It's property, i.e., capital gain.
Okay.
Make sense?
I think so, but what I know about property is real estate.
Well,
Did
yeah,
they
you have
not-
to
did
shift
they
your
not
mind.
mean real
It
estate?
did not mean real estate. It means property, meaning things you can buy and sell, I guess, but not inventory. So it's
All
kind of
right.
clear as mud there. All right, so the biggest thing I think you should take away with that is that if you're dealing in cryptocurrency, like you got to track it. Another thing we hadn't talked about is if you convert it. So lots of times there's just crypto that you want to buy that you can't outright buy. You can only trade it or swap it for like Bitcoin or Ethereum. Like right now in Baton Rouge, I think it was a company. I got some family members into this called the Game Coin, and I don't know all the details about Game Coin, but suffice to say, you can't buy Game Coin on an exchange. You've got to go to these swaps and trade
Right.
Bitcoin. Okay, so right then and there, if you think I'm swapping, taxable transaction. You've now sold your Bitcoin, and with the funds, you bought Game Coin
Yeah.
or something
and
else.
see, this is where I get a little confused
Yeah.
because I can understand that, but how do you know what you even owe?
How do
Because
you-
my only way, like that, I guess the only reference point I'd have is like, okay, I mean, what goes as an expense? What goes as profit?
Yeah, what's your basis, right? What? Yeah,
Is that what I'm asking? I don't
yeah,
even
you're
know.
asking how do you determine what's your basis in it? So if
So
you
define basis.
so basis,
before-
let's go back
just
to-
for the beginners.
No, this is no. It's I mean, shoot, almost. I'm saying it out loud. I'm like, I need to learn more. So basis is kind of think about the first example I gave you. You bought a lot for $50,000. Stop. That's your basis.
Okay.
You sold it for 75. You have a $25,000 gain. $75,000 sales price minus 50,000 basis. Basis is what you're in a property for. Your investment. Now, where it gets tricky with Bitcoin is how do you determine your basis? Is
Right.
it there's methods, there's specific identification, right? There's like, hey, I used that one Bitcoin that I bought for 50,000 in that transaction. Or is it first in, first out? Meaning I'm saying the Bitcoin I sold because let's say I own 10 of them. How do you determine which one you just sold? I'm picking the first one I bought. Well, you probably wouldn't do that because it probably has the smallest basis. And this is for me where I'm even don't have all this. I will tell you, have it all quite figured out about how do you determine the basis? Because in the tax world, a lot of times, the best example I'll give you is stock. If you get a 1099 from your brokerage, they tell me what your basis is.
Yeah.
They do this picking a first in, first out or average cost. So I would tell you the point is that's where you got to go slow and figure out what is in fact your basis. Because if you have 10 of a thing and you sold one of them, which one did you sell?
Yeah. Well, and especially because most of the time people are buying coins, if it's $1,
Yeah.
and that would be your basis,
Right.
and then it's $10.
Right. I would say, and we were talking about this before, there is a software, an app called Legible, I think is what it is. I'm looking it up as we're talking right now. Let's do Legible Crypto. And so this is, I think what they do is they handle these calculations for you. So big picture thought is, if you're moving in a lot of crypto, you ought to be looking at some of these apps to try to put the puzzle pieces together. Because I know on my end, I'm going to be doing a lot of research kind of before year end, before tax returns come
Yeah.
in about planning because that for me, I understand all the crypto concepts.
Yeah.
I understand the conversion's a sale, an outright sale is a sale, a swap is a sale. I understand all that. For me, it's the basis. I have some thoughts about it, but I have not yet dug deep into that to determine like basis. And there's, like I said, there's multiple ways. Specific identification where it's like I bought that thing and I sold that thing, or first in, first out. There's average cost.
And what you're describing now are these things that are defined by the IRS in other securities?
Correct.
Okay.
Yeah. Right. And actually, I'm kind of going through these questions. Let's see. How do I determine? This is a great one. Let's see. kind of going through some basis questions. But suffice to say, you got to come up with your basis to know what you sold for. So you have to be, if you're doing this, I mean, first of all, there's a tax return, like on your tax return, federal, on the first page of your 1040 is a big question. And the question is, like, what is it? I'm trying to find it. What the exact question is. It's, okay, let's see. Form 1040, this is question 5. 2020 Form 1040 asks whether at any time during 2020 I received, sold, sent, exchanged, or otherwise acquired any financial interest in virtual currency. That's the question. So obviously, if the IRS is asking for that with all of those terms, like basically they're just hitting on, are you buying, are you moving in Bitcoin or any of the crypto?
Right.
So you need to be prepared for this. And I will tell you, if you're in crypto, your tax returns got a lot more complicated and more costly. There's no question.
Okay.
Yeah, I mean, just because if you don't have a software doing this for you, which even that somebody who's going to get that information from that software is going to want to kind of understand and check. If you're trying to piece this together through spreadsheets and downloads, because if you're like any of my clients or myself, I think I've got 4 wallets.
Right.
And so I own crypto. I'm on it. Let's see. I'm thinking 1, 2. I've got it in 4 places. Like I think this Legible, and I'm going to look more into it, connects to those wallets. I'm not sure how it does that, but connects to those wallets and pulls in the transactions and starts to organize this for you.
Yeah. So they're kind of promising that like that sort of PDF you can download from
Correct.
TD Ameritrade at the end of the year.
Exactly.
You know?
And you knew somebody was going to step in this space because it's going to be it's going to get difficult.
Yeah. So, I mean, there's got to be people listening to this that are like, oh, shoot.
Oh, yeah. And they should.
Because.
Right.
So, you might have scared us. Now, can you tata us a little bit if you're not from Louisiana? That just means just speak gently with us.
Yeah. Like pat you on the back.
Yeah.
Oh man. Not really.
Let us know it's going to be okay.
The only
It's
thing
not
I can
gonna be
say
okay?
is I'm happy for you if you're holding it now, especially if you bought it, more than a few months ago.
Yeah.
Because today I think we're talking all-time highs of Bitcoin.
Yeah.
Pushing 67,000. I think you just need to be prepared for your tax return to be a little more complicated. That's just, I don't know how to sugarcoat it better than that.
Right.
And you need to be prepared and understand how it works. Meaning, if you're using it to buy things, if you're using it and trading one coin to another, like at least if you leave this discussion today, you understand that those are taxable events.
Okay.
That's the first thing to understand.
Yeah.
And also like to then know, okay, but what happened? Okay, so it also begs the question: if I move one crypto from one wallet to another, that's not taxable. That you haven't converted, you haven't sold. That's kind of like moving it from one pair of pants pocket to the other.
Yeah.
That's
Or, I mean,
nothing.
moving to bank accounts.
Exactly. You haven't done anything. But you have done something when you've, in effect, because when you swap or exchange, in effect, you've sold. They just cut out the middleman, right? You could have just as well sold that thing and bought the other thing. But you didn't. You just swapped.
All right. Well, let's try to do this. So I think we've established the fact that, all right, it's property. It needs to be accounted for.
Right.
And that there's still some ways that you may have to figure out your basis. But let's pick one for the sake of argument. Because there's 2 things people might be thinking is, oh, shoot, my taxes got more complicated.
Right.
And now I need to figure out how to track all of this.
Right.
But secondly, oh, shoot, I owe more in taxes that I
Right.
didn't think that I would have or hadn't considered. Can
Yep.
you walk me through, like, using some kind of base scenario, what you think you would figure? What's the math look like?
Yeah, math looks like this. And again, it's going to go back to that basis question. When I had a transaction, a sale, exchange, used it for services, whatever, something taxable, what did I make on that sale? I would say, at least for now, just kind of think about what your average cost is in that crypto.
Let's do this, if you will.
Yep.
Let's just assume earlier this year,
Okay.
when everybody's getting FOMO, somebody puts $10,000 and buys $10,000 worth of Bitcoin.
Yep.
Okay? And then they sell today.
Okay.
What do they owe tax-wise?
That's easy. Okay. That's a short-term capital gain.
Okay.
So you bought and sold within the same year. which is so short-term capital gain being something you bought and sold within a year, not necessarily within the same calendar year, but just 12 months. Okay. That is taxed at your ordinary income tax rate. So you hear the term, what's my tax bracket? What people mean when they say, what's my tax bracket, they mean is, what is the highest bracket that I've reached, my marginal income tax rate. So a short-term capital gain taxed at your marginal rate. So let's think 22, 24,
Right. And
32.
so the basis would be the 10 grand.
Basis is the 10.
And then they sell it for, let's just even 60.
Yep.
Even though today it's higher. Okay.
Yep.
So even 60, they sold it. So then they'd have $50,000 that would be taxed at their tax bracket.
That's right. Yep.
Okay.
Yeah, you have a $50,000 short-term capital gain.
Okay.
Let me give you a little more insight into basis, because I've been thinking about that, and as I said it, I'm like, wait, I've looked this up before, and I'm kind of refreshing my memory. Okay. Question 41 on these FAQs, which again, I'm going to put them in the show notes. How do I account for a sale, exchange, or other disposition of units in virtual currency if I do not specifically identify the units? So remember that concept I said, there is something in the property world, capital gains and stocks and all that, where you can say, okay, I bought 100 shares of Apple, and I've also bought more, but those 100 I'm selling. That's called specific identification. I'm pointing to that lot. You've heard that term before. It stocks at a lot.
Yeah.
I'm pointing to that lot and saying, those 100 are what I'm selling today. I sold those 100. I know the basis in them. If you don't otherwise do that, you default to what the IRS says here. If you do not identify specific units, the units are deemed to have been sold, exchanged, or otherwise disposed in chronological order, beginning with the earliest unit. So FIFO, first in, first out. So I'm not going to derail your comment here, but just be thinking, if I can't specifically identify, which is hard to do, especially in crypto where you're buying it, think about how many decimal places you're buying out. You don't sell that 10 millionth.
Right.
You sell an aggregation of all the things you bought at a time. So be thinking that first in, first out kind of concept means you're starting to look at what you bought. I'll give you a good example.
Thank you.
Let's just say you sold 2 Ether, which is Ethereum is Ether. Okay. You would go back and let's say you own 7 of them. You would go back
After the sale?
No, before the sale you owned 7, then you sold 2.
Okay.
If you didn't specifically identify the 2 you sold, which you probably didn't buy 2 in 2 different transactions, you probably bought it over time. What you would do is you would aggregate the basis of all the things you bought up until the point you reached the first 2.
All right, one more time.
So let's just say you bought 0.3 at one time, you bought 0.6, now you're up to 0.9. Okay, what's my basis? You're running it. Okay, now I bought another 0.3, I'm up to 1.2. I bought a 0.6, that's 1.8, so I'm close. Then I bought another 0.4, so I'm up to 2.2. So you would stop and say, what did I pay for the first 2? That's first in, first out. That would be you aggregating the basis of those units.
I understand the first in, but where's the first out coming from?
First in, first out means the ones you bought first are the ones you sell first. First in, first out. FIFO.
Okay.
Yeah.
And is that within a certain time period?
No, it's just
forever.
You just track. You just always going. So first in, first out in that example. Now you're left with the remaining 5. So right. So you bought 7, sold 2. You'll do that same calculation when you go to sell the next batch.
Oh, okay.
You'll look back to what were the 5, what were the first ones I bought? And you'll sell those up until the point that you reach the amount you sold. So if the next sale you sell 0.5, you'll look at those 5 you bought and say, okay.
And then you would take basically
what you paid for those.
In USD.
Correct. That's right.
Okay. And I guess it gets even more complicated if you bought them with other crypto. Yes.
Yeah, if you bought them with other crypto, then you sold the crypto you used to buy that. You'd have to do this same calculation on the thing you sold. So let's leave this conversation with specific identification, hard to do. Yeah. Hard to point out and say that 4.35684 Ether, I know where I bought that. Hard to say that.
Yeah.
You're probably going to the first in, first out which is where you're just accumulating or looking back and say, okay, when did I first buy? Adding those up until you get to the point you reach the amount you sold and say, okay, what did I pay for those things? Is that clear?
Okay. I think so. I might be getting a little hung up on the paying it to the amount you sold.
Meaning you're going, okay, let's just say back to my example, you bought 7 and you sold 2. But you probably didn't buy those 7 in one transaction. You probably bought them in multiple transactions. So you're adding up the transactions that equal the first 2 Ether you bought. Which could be fractions. So you're just adding them up until you get to the point of you say, okay, I reached 2 of them. What did I pay for those 2 in aggregate? Might be 100 transactions.
Okay, and then you're adding all the
purchases,
money you spent,
and that's your basis. Back to your example, you said I sold Bitcoin for 60 and I paid 10. The paid 10, that's how I'm determining how I paid it.
Gotcha.
I'm saying,
so you're just saying,
what did I sell?
Yeah.
Let me find where I bought those and keep aggregating until I reach the point of that.
So what if let's just say you bought, I guess what, and not to get too much in the weeds, but if you sell less than you bought,
well, you wouldn't do that. I know what you're saying. I guess, you just have, at some point you're gonna have to do some, like, you might get to the point where you're adding up first in, first out, and I don't think this is gonna make for a great podcast here.
Right.
I think you just know this. You're probably not going to do specific authentication. You're going to do first in, first out, which means you've got to know and keep records of what did I buy, and then at what point did I sell those? Because now those are out of the equation, and now your first in, first out is dealing with something you bought later.
Gotcha.
Yeah.
Okay. And then if you're looking for rough calculations on the math, it's just basically your gains, and they're going to be capital gains.
Yeah, capital gains short term defaults to your tax bracket, your marginal income tax rate. If they're long term, that's great.
Yeah.
That's going to be probably 15% for most people, but it could be as high as 20 or 23.8.
Yeah.
So long term's great.
Okay.
Yeah. I know. It's like,
yeah. All right. So I think what we got. Okay. Basically,
we didn't talk
to
about
kind of
staking either, so I just want to bring that up.
All right. Well, let's go into it.
No, finish your thought.
Well, I was just kind of trying to recap where we've
Yeah.
determined. You got to pay attention to it.
Yeah.
You got to know your transactions, and then also you've given us a little bit of insight on like what our tax liability would be.
Right.
What are some other things in the crypto world that create taxable?
Yeah. Any kind of rewards, staking, where you're essentially lending your crypto or putting it up in these liquidity pools and different things. So like, you need to understand that anytime you get paid, that's not capital gain, that's ordinary income.
Okay.
So it's different, right? So we talked about a short-term capital gain being ordinary income, taxed at your ordinary rate, generally going to be higher than a capital gain. Well, always going to be higher than a capital gain.
And so at what point? Like, let's say, for example, you've put in one of these liquidity pools, and you're just getting paid. Like cake comes to mind. Like you're getting paid in cake.
Okay.
And then you end up at the end of the year with like 40 cake.
Okay, so guys, I mean, again, this is why you've got to keep records of stuff. Every time they paid you in it, what was the value of it when they paid you? That's how much your income is. So
if you never, you would be.
Yeah, that's income to you. Now it also becomes your basis, right? So give you an example. You bought. Let's make a very simple example. You're mining a cryptocurrency that is worth $1.
Okay.
Very simple example. You did it every day for 30 days. So for a month, you end up with 30 of that token, okay? You have $30 of income, regular, ordinary income, and now your basis, if you sold those 30 for $1.50, you'd have a $15 gain. $1.50 times 30 would be $45. Your basis, you developed a basis in something by being taxed on it. That's a way to develop basis.
Okay.
When somebody taxes you on something, it becomes your basis. So in that example, you're 30.
So what's I guess bumming me out, frankly, about this is that like,
because you're getting into this.
Yeah, like you could end up with, let's say you end up with whatever you're talking, cake. You got 40 cake at the end of the year, and they're worth like December 31st. They're worth $20.
Okay.
You owe taxes on 40 times 20, right?
No, you owe taxes on whatever they were worth when they gave it to you. So I give you a very simple example of the token being worth $1 at all times, but it fluctuates.
Sure.
I mean, so.
Well, let's just say it was steady.
Yeah.
Steady
so yes,
20.
You owe.
But then January 1st, it tanks to $2.
Bummer.
Okay. All right.
You pay tax on the 80 because when you got it, it was worth. When they exchanged it for your mining services, essentially, it was worth $80. That's your basis. And now, if you then sold the 80 for $2, you'd take a $78 loss, right? Your basis would be 80. Your sales proceeds are $78. Okay. So you'll get a loss there, but only when you sell.
Yeah. All right.
I know.
I just want to go back in my mind to when I thought it was all internet money and none of it mattered.
It didn't matter. It's the offshore bank account in the Caymans.
Yeah. Well, I mean, who's
to know?
It's best not to articulate the thoughts in my mind.
Right.
It's like,
Yeah, so I just think
I don't want to, you know.
I think people need to really, like, even if they don't understand all these questions, I mean, they're really good. And I think they at least get you thinking about these concepts of property, of exchanges, of if I get any type of crypto in exchange for mining, like all of these are taxable events.
Right.
And I just don't think people are thinking of them. And it's just hard to track.
No, yeah. No, I mean,
You don't get in this thinking, oh man, I need to,
Right.
the minute I do this, I'm going to start
yeah.
tracking all this.
Let's just say if you've been into crypto for a while and you haven't thought about this, you need to plan a long beach trip.
Right.
Because you have a lot of accounting
You
to
have
do.
a lot of accounting to do. Yes. Yeah. So, I keep going back to these FAQs, but they're really good.
Yeah.
Yeah.
All right. Well, I think that's a good place to end it. I think we've covered a lot. You've definitely scared a lot of people straight.
But I do, I mean,
at least one person.
No, but look, I mean, you know this. We were talking about this before. I mean, obviously, I'm invested in crypto.
Yeah.
It's not going anywhere. I'm a big time believer.
Yeah.
And it's fun to talk about.
Sure. Yeah. Well, I mean, it's like CrossFit. If you know somebody that's into crypto, you know somebody, they're into crypto.
That's right. That's right.
Same with other thing. All right. Well, that's a good place to end it. And look, if you are thinking, oh shoot, I need to get a handle on this stuff. I'm clearly biased, but I really don't know of another CPA who would probably be as in tune to helping you solve this problem as Marcus Mire at the Mire Group. So,
We try.
yeah. So check out more content at Mire.group. You can see the other podcasts there, as well as reach out to Marcus for specific accounting questions if mine aren't good enough. And,
Right.
You can put some time on your calendar with him.
Absolutely. And we'll put this in the show notes, and also this Legible. I'm going to put a link to Legible in the show notes because I think that's could be a great platform for people to try to get organized.
I know I'll be checking it out.
Yep. All right, guys.
All right.
See you next time.